This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed, this is Bloomberg Businessweek Daily. It is Tuesday, July 14th. Happy Bastille Day. Did you know that?
I do now.
Yeah, that's going on. It's also kind of a sort of Fed Day with Kevin Warsh up on Capitol Hill.
Yeah, Fed chiefs want to do. This is the first time we've heard from him in that position.
Correct.
And yeah, we got a full breakdown in just a few minutes.
Yeah, we're all in on Fed talk because we did hear from Chris Waller yesterday. So Bloomberg's Mckee standing by in D.C. He listened to all of today's testimony. I believe he was at the Federal Reserve or up on Capitol Hill listening to all of it. So we're going to talk to him. The Conference Board's senior U.S. economist, Yelena Shulyatyeva, interviewed Chris Waller yesterday. So she's going to join us as well. So all in. It's a Fedapalooza, if you will.
It is, but we're doing more than just talking the Fed and rates.
We have a great guest.
We do. Do you remember?
Courtesy of you.
Well, do you remember back at Milken, Larry Fink was predicting the birth of a futures market for computing power?
He was, wasn't he?
Yeah, we actually played that. You were at Milken. I was here. We played that. Today, Kalshi is ramping up its effort to build a market to do just that. We got its chief risk officer, Udesh Jha, joining us in just a few minutes.
So many questions.
This is a Bloomberg exclusive.
AI disrupting everything, including financial markets. All right, looking forward to that. He spent a long time, too, at the CME. So this guy comes loaded with a lot of expertise there. Hey, and not to be forgotten, for sure, the barrage of big bank earnings. Record profits, what?
You know, it's a busy day when that's our third tease.
It's really
when
funny.
you have the five of the six big banks reporting.
Yep.
And we get to it third.
And only, I think, 3 are trading higher. There's a couple that are under some pressure. All right, a lot to get to in the next 60 minutes. Tim and I are certainly ready and eager to go. Let's get you started, though, with a check on the trade. Here is Charlie Feller.
All right, I thank you very much. Also keeping an eye on the eco data. CPI this morning, PPI tomorrow morning. A cooler than estimated inflation reading this morning is bringing some relief to Wall Street traders worried about a flare-up in geopolitical threats. We got oil pushing higher. At the start of the earnings season, big banks did post solid results. And of course, a rally in chip maker shares, that is also helping lift sentiment. Right to the numbers with the S&P up 30 now at 75.46. That is a gain of just about 0.4%. The Dow in the red, weighed down by IBM. IBM shares down 25%. Right now, the Dow is down 0.1%. NASDAQ, though, up 1.1%. NASDAQ 100 index doing a little bit better, up by 1.3%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, up 3.2%, and the VIX holding above 16. 10-year at 4.58%, with the 2-year 4.20%, the 30-year 5.08%. Gold now higher by $58 the ounce at $4,060. Yesterday, of course, you recall, it did dip below $4,000 the ounce. Right now, up by 1.5%. West Texas Intermediate crude up 1.1%, 78.97 a barrel. Barrel of Brent 84.51, up by 1.5%. Wall Street, meanwhile, certainly keeping an eye on shares of software and IT services companies. They are moving lower after IBM reported preliminary results that missed analyst expectations. IBM down 24% right now, and among some of the software names, we are looking at shares of Microsoft down by 1%, Workday down almost 3%, Oracle down by 1.4%. Recapping, S&P up 0.5, and for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
Folks, you are set up on the market trade on this Tuesday. All right, let's get to it. Certainly one of our top stories. Fed Chairman Kevin Warsh testifying before the House Financial Services Committee. It's his first semi-annual congressional testimony as Fed Chair. Managing inflation, definitely top of mind.
If we get policy right, and I can assure you we will, the inflation surge of the last 5 years will be a thing of the past. As the chairman said at the outset, inflation's a choice. The members of our committee have no tolerance for persistently elevated inflation, and we share a resolute commitment to ensure price stability.
And that was Fed Chair Kevin Warsh earlier today up on Capitol Hill. It came on a day that U.S. consumer prices declined in June for the first time in 6 years, dragged down by the biggest decline in gasoline prices since 2022. And ex-food and energy, the index was flat from the prior month. Let's get to it. Listening to his testimony, he's in D.C. today to do so. Watching the economic data front as well is our own Michael Mckee, Bloomberg TV and Radio International Economics and Policy Correspondent. He's out there in our D.C. News Bureau. Mike, good to have you here. Fed Chair Kevin Warsh said that, quote, mission accomplished is not his view, even after today's CPI report. Sounds like a hawk, or does it sound like a Fed chair who is watching the economic data and figuring out policy around it?
Well, it sounds like the latter, Carol. The Fed chair couldn't really say that this was mission accomplished in terms of inflation because it was all energy that really drove the big decline. And we know now that gasoline prices, oil prices, they're all headed higher. And so we're going to get another inflation bout coming up, along with more tariffs to be imposed. So they really don't know what's going to be happening. But the hearing itself, you know, sometimes you get heat, sometimes you get light. Today we didn't get either one. Neither party went after him. It's sort of like, I would say, when you hire a new baseball manager or something. You don't start asking him, why aren't your guys hitting, or, you know, why did you mismanage the bullpen? You say, well, what are you going to do now? It was a friendly sort of welcome to the Hill. Maybe we won't be as nice next time kind of thing. But there was no real heat brought by anybody, and there wasn't a whole lot of information that was provided.
Well, I think lawmakers and certainly Wall Street are still getting used to him and still getting to know the Fed chair. And I'm wondering, based on what we learned today, how we can draw the line between the Fed chair of the last 8 years, or the Fed chair, the most recent Fed chair, I should say, Fed Chair Jay Powell, and what he did in his approach versus Kevin Warsh's approach.
It's still a little early to try to tell. Obviously, they have different speaking styles. Kevin Warsh brought a briefcase full of cliches up there today that he has been giving us for the last couple of weeks. But how he's going to relate to members of Congress, we've heard that he has been a visitor up there talking to members. That's something that Jay Powell did a lot of. That's something that Powell said the advice he would give a successor would be to spend a lot of time on Capitol Hill talking to people. So maybe he's starting off on the right foot there. But the real question everybody had going into this is, yes, you are committed to bringing down inflation. You've told us that. You've said that many times. And, of course, that's the Fed's job. But how are you going to do it? And he didn't have anything on that. He doesn't want to give forward guidance, but he also didn't talk about a reaction function, like what are you looking at to tell you whether you need to do this or that? What are the scenarios that could happen? He dodged those questions. He even dodged a question about whether they'll do another news conference.
Interesting. Yeah, and he loves to talk about the family fight. I don't know. I've seen some family fights, maybe been in a couple. Some come out really nicely, and we all kind of hear each other. And then there are those you don't talk to somebody for a decade. So just going to put that out there.
I'm afraid our time is up, Carol.
Exactly. Hey, Chair Warsh doubled down on the 2% inflation target. That target we are also glued to and obsessed with. Remind us why that is the magic number, and is he right to be glued to it, Mike?
Well, the feeling is he doesn't have much room to change it because Wall Street will figure this guy is coming in and he wants to bring inflation down, so he's moving the goalposts. In this case, 2% was chosen back at the It actually started under Alan Greenspan informally, and then in 2012, Ben Bernanke's Fed adopted it as the official target. And the reason they chose 2% was they wanted to have a margin between that and zero so that the Fed would have room to lower interest rates if they were in a recession. If you had a zero inflation target and your interest rate was at zero, you'd be stuck. So they set it at 2%, and that's sort of the world standard. And there's been talk about whether they should go to a range, and they might do that, but it's going to take a little while because you're going to have to get Wall Street used to that. The other interesting thing that he talked about today, the one definitive point he did make was he was asked about the trim mean inflation measure that the Dallas Fed and the Cleveland Fed put out. And he had said something in his confirmation hearings about how that might be more accurate, and everybody ran with that and said he wants to change to it. He said, no, those stories are in error. The trim mean isn't any more accurate than any of the others. I'd like to come up with a new kind of inflation measure that we know is accurate, but that's not what I'm trying to replace it with.
Mike, you have to go in 30 seconds, but before you go, the concept of inflation being a choice, he said it before. What does that mean?
Well, he sort of backed into the idea that it's the old Milton Friedman, always and everywhere, a monetary phenomenon. The fact that the Fed would print too much money, although he did lay off part of that on Congress, saying your fiscal choices during COVID also made a difference. But what he was saying is we should react strongly when inflation's a danger. We shouldn't wait like the Fed did in 2021 and 2022. We should just get right on inflation. So in theory, that's where they're going to go, but how they're going to get there and on what they base that decision, he left us without any information. The Senate can try again tomorrow.
For the record, I prefer no inflation, so I'm just going to put that out there. I don't know if that,
none at all.
I don't know that meant well a little bit because you need a little bit. You don't want to go in the other direction. I don't know. Just putting it out there. Mckee.
Mike, come back soon. It's been too long.
Never fighting here. I'm just going to put it out there.
Happy family.
Yes, totally. Michael Mckee, Bloomberg TV and Radio International Economics and Policy Correspondent there in our DC Bureau. We're going to stay on the economy and the view of the Fed because we are getting a bunch of messaging, actually this time from another member of the U.S. Central Bank.
Yeah, on Monday at a New York Association for Business Economics event, the Conference Board's senior U.S. economist, our former Bloomberg colleague, Yelena Shulyatyeva, moderated a discussion with Fed Governor Chris Waller. He said he would need to see several months of lower inflation data to feel confident in the trajectory of price pressures. If that pans out, he said, it would make sense for the Fed to continue holding rates steady. And if it doesn't,
if we get another hot reading on core inflation this week, then the FOMC will need to consider tightening monetary policy in the near term. As always, we need to avoid making the mistake of fighting the last war and reacting too soon to tighten inflation.
All right, that, of course, was Fed Governor Chris Waller with the Conference Board's senior U.S. economist and our former Bloomberg colleague, Yelena Shulyatyeva. And she is the New York Association for Business Economics, I believe, new president. So congratulations. Listen, it's so good to have you here with Tim and me, Yelena.
that's Miss President to you.
Yes, Miss President, Madam President.
Thank you, guys. It's such an honor. Thank you.
Well, honor to have you here back with us. We always appreciate your perspective on things. Tell us about this conversation with Chris Waller. He seems like he and the Fed, to some extent, are on point. They are still concerned about inflation.
So what got everybody's attention yesterday was that Governor Waller said that, yes, if we get another hot print, we would not hesitate and we will have to move policy rates in the right direction, right? But what he said as well was that, well, if we get a cool reading, we will have to see some more evidence that inflation is subsiding. And I think that's exactly what is happening right now. So we got a cool reading on CPI. And I do see Chair Warsh's comments today in the same context. So he said that the mission is not accomplished. And basically, the Fed now needs to see a few more cool readings on inflation to stay on hold. So at the Conference Board, we think that the underlying pace of inflation will prevail, and the underlying forces that would push inflation lower will prevail in the second half of this year, and ultimately we will see the Fed staying on hold. But that's exactly what happened, I think, both at the event yesterday and as Chair Warsh was commenting on inflation today. They just need to see a little bit more evidence that inflation is cooling down. Well, obviously, the CPI report today was a cool one.
It was, and that report notwithstanding, I just want to go to your prediction at the Conference Board. Why are you confident that you will see lower inflation prevail, especially at a time where we do see things heating up in the Strait of Hormuz?
Well, energy is not the only thing, right? So
it's not, but
it's
it really goes through to so much. It goes through to prices we pay at the grocery store. It goes through for transportation costs. So, and not necessarily a lot of services, and it's not as big as part of our economy as it was 30 years ago, but it has an effect.
Sure, but what kind of an effect, right? Does it really suppress consumer demand? And we do see in other prices that consumers are pushing back. They are not happy and they're pushing back and they're not paying the higher price. So look at, prices of other goods like cars and apparel. There's also some, tariff impact that is leaving the inflation, and that's what we see as well. So another thing is housing. So housing prices continue to normalize. So there are a lot of other things that may, countervail other other forces that are pushing inflation higher. Another thing that I would like to make is that if you look at prices of gasoline, the prices at the pump are still below the average level that we saw back in June. So we may actually see another cool reading in July, despite some recent pickup in energy prices.
So, economy okay? More than okay, Yelena?
It's much more complicated than that, Carol. I think it's okay, but growth is very much concentrated in investment. And that's not something that I'm very happy to see. I mean, it's great that the economy is growing and investment is a positive thing, of course.
But is it one story in terms of the investment that's going on?
Right. And what I would like to see to be more confident in the economy is consumer engaging at a full force. And unfortunately, what I see is that consumers will probably, spend at a slightly slower pace, and growth in that sector is what really matters for broader economy. And here, probably, I'm a little bit more pessimistic than Governor Waller, who mentioned that consumer is really doing great at the event yesterday.
So then what are policymakers to do?
I think they will stay on hold. And, I think that the 5 task forces that, Chair Warsh reiterated today, they will allow the Fed some time to really look and see what is happening and how all the events in the Middle East are percolating through the economy.
Interesting times. Yeah. This war that kind of keeps going on and continues to be a factor. Yelena, thank you as always. We really appreciate you jumping on, especially after that event you did with Chris Waller. Really fun to get you here directly. That, of course, Yelena Shulyatyeva, senior U.S. economist at the Conference Board. She is Madam President of the New York Association for Business Economics.
Hey, I'm watching shares of Lucid Group, the EV maker. The company under pressure today, this after there was a report out that said that the maker is working with a restructuring advisor and weighing options that include filing for bankruptcy, protection, or going private. We're just learning a headline on the Bloomberg terminal. Lucid says that AlixPartners has not recommended bankruptcy. Shares of Lucid Partners have been under pressure today, paused for volatility, and down 41% today, but still paused for volatility as we speak.
All right, keep a watch on that. That on a day when we see major market averages here in the U.S. Pretty much hovering near their best levels of the session, just up about 0.5% on the S&P 500. NASDAQ 100, though, up 400 points, up 1.4%. Go inside the market, though, the S&P, and you see more names down when it comes to the trade today. Hey, when we come back, BlackRock's Larry Fink has talked of a new asset class when it comes to AI and computing power. Well, it sounds like Kalshi heard him. We talk with Kalshi's chief risk officer. That's next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg, keeping an eye on Lucid shares. Now, the stock has been halted. Lucid is down 41.7%. It did put out a statement moments ago saying reports suggesting it is considering bankruptcy or other strategic scenarios are false. It also says that it has sufficient liquidity to support operations well into next year. And Lucid says AlixPartners has not recommended bankruptcy. early. However, looking at a trading halt right now on the EV maker, Lucid shares ahead of the halt, down by 41.7%. Lots going on in the markets today. Bottom line, S&P pushing higher. The Dow is lower, being weighed down by IBM. IBM shares down roughly 24%. Again, the S&P up 0.5. NASDAQ up 1.1%. Techs are rallying with the NASDAQ 100 index up 1.4%. And the SOX, the Philadelphia Stock Exchange's semiconductor index, up now by 3.3%. The VIX holding above 16, a 10-year at 4.57%, the 2-year 4.19%, gold at $4,059 the ounce, up 1.4% yesterday. Spot gold was trading below 4,000. West Texas Intermediate crude 79.18 a barrel, up 1.3%. Barrel of Brent 84.62 on Brent crude, up by 1.5%. Bank earnings very much in focus today. Mixed bag. JP Morgan Chase up 1.6%. Citigroup lower by 5.6%. Wells Fargo after earnings down 3.2%. Bank of America up 1.3%. Goldman Sachs now surging by 8% after earnings. Morgan Stanley reports tomorrow morning. Morgan Stanley up by 2.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, so remember back in May, I don't know if you remember this, it was at the Milken Institute, their global conference in Beverly Hills.
If you weren't watching our show, if you don't remember this,
because it was on.
It was on.
BlackRock CEO Larry Fink said global demand for computing power is so huge that traders will one day be able to bet on a futures market for it. Here's a refresher in case you missed it or forgot about it.
The United States is short power. We're short compute. We're short chips, and there are going to be shortages in all three. And memory, 4 things. I actually believe a new asset class will be buying futures of compute. We just don't have enough compute power right now.
And that was BlackRock's Larry Fink at Milken back in May. Well, Larry's prediction might just be coming true. Kalshi has created a tool that plots the future price of computing power, joining the ranks of exchange and index operators attempting to build markets around the commodity powering artificial intelligence.
And joining us now with more in a Bloomberg exclusive, Udesh Jha, Chief Risk Officer of the prediction market Kalshi, joining us from London. Also with us, Bloomberg News finance reporter Kat Doherty here in the studio. Udesh, you were just appointed to this position coming from the derivatives marketplace CME Group. You spent 16 years at CME. You posted on LinkedIn that you started paying attention to Kalshi back in 2024 during the elections. What struck you then, and why at the end of the post you say, "I've never felt this energized in a long time." What struck you about this company?
Tim, thanks for having me on the show. I think as you said, I've been at CME. I was at CME for 16 years. I joined CME at the onset of the Dodd-Frank post-clearing mandates. And now, looking ahead 16 years, I think I see the same excitement in the financial industry with prediction markets, with the migration to tokens, with cloud adoption, and so many other things. So it is, and from that standpoint, I think Kalshi, at the center of a lot of that innovation, is a really exciting place. And I'm super excited to be joining at this part of the journey with them.
So Udesh, many people know Kalshi for event contracts, betting on the likelihood of, let's say, a FIFA game and who's going to be the World Cup winner at the end of this week. But you've launched a number of new products outside of event contracts. Can you talk about some of the recent initiatives and why you're moving away from or adding to event contracts?
Yeah, that's a great question. I think as we have seen, event contracts or prediction markets are becoming quite mainstream for a few reasons. One is the predictive power that they provide, the very specific questions that they ask, which help the institutions, retail, and other participants manage risk. And today we are at Kalshi. We have about a very large set of institutional and direct retail participants who are able to do so. And with that in mind, we have seen a fairly large growth in some of the very important asset classes, such as crypto, such as KPI markets. And now I'm excited to talk today about the compute market, which is GPU related, that we are excited to also bring in to the marketplace for risk management and other needs.
And we want to dig into this. Just two quick questions. Is BlackRock involved?
Right now, at this point in time, this is something that we have done organically. We do have pricing information that comes from one of our partner vendors that's available on our website. But we do expect large institutions to take advantage of this innovation by you looking at the forward curves and use it to price deals, to do OTC contracts, to do other sorts of derivatives for their purposes.
And I know it's early. Are people calling you already because they're interested in terms of various institutions or institutional investors?
Yes, we are. We are getting a lot of inbounds because we are filling a void in this marketplace, which was very important. If you're Bloomberg, for example, is very big in the swaps market, as you know, for pricing interest rate swaps or any other derivative or any other deal that depends. Forward curve is very important. It is extremely valuable for anybody doing a 5-year swap or a 2-year swap to know what would be the rate on a particular index out there. Right? And that's precisely what we have done. We know that eventually this market is going to become quite large. Some estimates of the total addressable market size are in trillions. If you look at the amount of funding committed by the hyperscalers, they are north of 500 to 600 billion just for 2026. And if you look at multiples beyond that, what this market could be, it's a very large market. So we are getting a lot of inbound, but we do want to start first with a natural requirement, which is to bring price discovery in the marketplace so that it can be used for hedging, trading, and other purposes down the line.
So CME Group said back in May that it would launch computing power futures linked to an index compiled by Silicon Data. Intercontinental Exchange, it owns the New York Stock Exchange, and I'm reading right from Kat's article here, teaming up with the financial infrastructure firm Orn to add futures contracts for computing power. Why are you better positioned to build this tool than they are?
I think I would start by saying that by such CME and ICE and others, it actually lends a lot of credence to the marketplace, to the demand for the asset class, in addition to what Larry Fink said earlier. But prediction markets are unique for a few reasons. One, the compute or the GPU market is not standardized at this point in time. There are many different factors that play into that index. It could be locations, the chips, the different kinds of chips, the grades, the different uses. So rather than focusing on a particular index or a particular contract, the prediction market allows us to list several of these contracts, which is what we have done. And the prediction market also ensures very robust price discovery at much lower levels of total open interest that we have seen through many of other contracts. So this is where it is very uniquely positioned to bring in a more accurate price discovery than focusing on one or two different grades of the marketplace and do a traditional future. So eventually,
Udesh, you're mentioning an issue that has been raised in terms of this is a nascent asset class. It is a market that is evolving. We have a number of exchanges, as Tim mentions, that have gotten into the compute market and trying to develop it. Why is this price discovery that you're talking about, do you find it to be a more accurate indicator of where compute prices are at this moment, and then with this forward curve where they are indicated at a future point in time?
Yeah, I think one of the unique aspects of our price discovery that it's market driven. There are some forward curves out there, but they are derived not out of market inputs, but through either OTC deals or other bilateral contracts. But ours is a true market driven, and that is where the power of the wisdom of the crowd of the marketplace and the accuracy that comes out of it comes to full form, and that's why it's unique and the first in its category.
And who do you see as your core users for this product?
We do expect to see a variety of users. I think on one side, you have the natural sellers of compute, hyperscalers. You can have the neo cloud providers. On the other side, there are the users of compute, AI inference companies, medical research companies coming up with which have significant computing needs to do drugs research, retail, many of which which were interested or are speculators in the marketplace. So we do feel this, just like many other commodities, to have a breadth of producers or suppliers and demand that will propel this ecosystem or the marketplace.
Udesh, I want to try to understand some of the nuance in this and how you account for the nuance. Maybe it's algorithmically. I'm just curious from you. In this release, Tarek Mansour, the company's founder CEO, says that compute is the new oil. Compute futures will eventually dwarf oil futures. Oil, though, is fungible. It's a barrel of Brent is a barrel of Brent. It kind of doesn't matter. An hour, though, on an H200 is not the same as an hour on a B200. Chips depreciate. New architecture arrives every 12 to 18 months. Pricing power shifts. How do you build a reliable forward curve on a commodity that kind of like as soon as, it's like a new car, it becomes obsolete or it depreciates, as soon as you drive it off the lot?
And that's a very, very important point that you make, Tim. I think, as I mentioned earlier, this marketplace is still finding its footing. There are several grades, there are several different tenors, several different other categories that give the appearance that it is quite dispersed. I would like to say that even in the oil market, there are many different grades. There is the WTI Cushing grade, there is the WTI, but there are various forms of WTI. But the marketplace has gravitated and formed a representative index, which is good for the market, and then there are basis products that derive. So we expect the marketplace to gravitate towards that, and the prediction markets and our forward curve to be a good enabler, so that markets, our users, can see the price on different grades of GPU compute at different tenors, and then the market will most likely gravitate towards a limited set of usable indices, and then there will be basis products adjacent to those indices, just like WTI and Brent have.
We're speaking with Udesh Jha, Chief Risk Officer of the prediction market platform Kalshi, joining us from London. It's a Bloomberg exclusive. Kat Doherty from Bloomberg News is also here.
Udesh, I wanted to ask, so we have this forward product that you have just released, but the intention moving forward, could you and do you plan to release other products that are investable products on top of this forward curve?
Yes, I think the forward curve is sort of your foundation to do other products, such as futures, such as swaps, such as any other derivatives. So we'll see where the demand takes us. But I think our focus in the very immediate term is to build liquidity on the markets that are driving this forward curve, so that this becomes the anchor or the benchmark for the industry.
So one of the things I'm curious about is, and follow me for a second if you get, like, who actually trades this in the first year? And I bring it up because the buyers who need it this most, we're talking about the AI startups using millions of compute for training, right? There's that, are also the ones least able to post margin and kind of manage derivatives risk. The sellers, the hyperscalers, whether it's AWS, whether it's Google Cloud, they have already, in many ways, locked in capacity through those long-term contracts. We talk about it a lot here at Bloomberg. They have no obvious incentive to essentially give up some of that pricing power to an exchange. So, Udesh, who do you see as using this in the first year, if you will? And what happens if liquidity is too thin, so thin, to produce a meaningful price signal, which is so important to really a truly functional marketplace?
I think you're very right. I think there is a lot of capacity that the hyperscalers have already committed to. But we are also seeing an astronomical speed at which the demand is growing over the last 6 months, or even a year if you look back. The adoption of compute that are heavily dependent on AI and others have been growing on quite. So there are going to be quite a few on the demand side that will emerge, whether it's financial institutions or drug research institutions or neoclouds lending them. So we do expect, and then retail, of course, for an asset class which is as exciting and potentially volatile. I think we will see retail and other speculative power come in as well. And I do expect hyperscalers to, at some point in time, do look at this market as well.
Udesh, I want to bring it back to your experience at CME. You've launched this forward curve. You're planning to launch other products off of it, other derivatives. What gives Kalshi the right to compete with the incumbents in an industry that you have many traditional institutional players in the market that are used to going to a CME or an ICE, and you have a newer player like Kalshi coming in with new products? How do you plan to stand up against the incumbents?
I think one of the biggest strengths of Kalshi, and this is one of the reasons why I joined Kalshi after 16 years at CME Group, was the importance that Tariq and Luana put on risk management and doing it the right way. If you remember, Kalshi waited for 4 years waiting for regulatory approval to just launch a product. Recently, we launched perpetual futures. We worked for 18, 19 months to launch it. So I think the risk first is and adopting of technology is one of the reasons why Kalshi, I feel very confident that we have the right to win in this marketplace.
You know, it makes me think too of and Kat hit on this, and she hits on this in her Bloomberg News piece as well, the evolution of the platform. It's known for being a prediction market, and Bloomberg Intelligence, our in-house group of analysts here, had a report earlier this year that said the vast majority of what happens on prediction markets, including Kalshi, is still sports gambling. What are some benchmarks that you're using internally right now to make sure you diversify what is actually happening on the platform, so you move away from just concentration risk?
Yeah, I think if you look at the growth, I think everything is growing. So obviously, with the events in the sports, with World Cup and others, it is hard to focus on something that's not World Cup. But if you look at the growth in our marketplace, which are true risk management products, whether it's weather markets, whether it's KPI markets, whether it's people wanting to have a prediction market on a Fed raising or keeping rates on, I think a lot of them are growing. I think, and we are also starting to see institutions come and join our platform. So overall, I think the whole pie is growing quite comfortably where we would like it to be, even though some of the recent World Cup and other events give the impression that the market share is still very high on sports.
Udesh, I want to end where we kind of started, and we talked about your background. 16 years at CME, MD running post-trade services. CME is suing the CFTC to block Kalshi's perpetual futures. So you come from a company that's trying to shut down the company you just joined. It's kind of interesting, the dynamics. I'm curious, should CME be worried at their former risk head who knows clearing and settlement infrastructure, who now works for a competitor?
Well, I wouldn't want to speak on CME's behalf, but what I want to talk about the perpetuals is the perpetual futures that we have launched are very different than what the way perpetuals trade offshore. So I think, and they are very much like any other future that CME or others trade. So I think to answer your question, again, I'm not going to speak on CME's behalf, but I'm quite excited to be in a place where we launched the first true perpetuals in a regulated exchange using the proper risk management tools. And now the first exchange to be doing a compute forward curve, which will benefit the broader industry.
Have you had conversations with your regulators about perpetuals and your plans moving forward to, I assume, launch many more outside of crypto assets?
We always have conversations with our regulators on different products and asset classes. So the answer is yes, we follow the regulatory process which is quite robust from a CFTC standpoint in terms of how they look at our products, the risk management, the data before we launch anything that is on our platform.
Well, we are definitely intrigued and interested. And every time you say something, we were like, wait, we have one more question. So Udesh, stay in touch, and we'd love to know how this progresses. Udesh Jha, he is Chief Risk Officer of Kalshi, joining us from London. So appreciate it. And also in studio, our Kat Dory, out with this Bloomberg exclusive. She's Bloomberg News finance reporter. Highly recommend you check out her story. It's on the Bloomberg and at Bloomberg.com. So great stuff.
In just a minute, we're talking Wall Street Bankapalooza, the biggest bank banks among them posting their quarterly updates.
Kat did some reporting on that this morning.
Kat has had a long day, so we are very appreciative of her joining us here. Charlie Pellet has got some details on the market moves today. Hey, Charlie.
Oh, I thank you very much, Tim. Do want to begin with a developing story. A couple of headlines right now on the Bloomberg involving Verizon and involving job cuts. Verizon Communications said to be planning another round of layoffs this week. Now, this is according to Barron's, citing an employee who was briefed on the plans. Verizon said to be announcing the cuts Thursday morning. We don't know how many. Bottom line, though, Verizon said to be cutting jobs this week. Verizon shares right now down 0.6%. A soft CPI report this morning. PPI tomorrow morning. The Dow lower. S&P, NASDAQ 100 index all moving higher. IBM shares weighing on the Dow. Shares of IBM plunging 24.4% right now. Dow Industrials little change, down under 0.1%. S&P keeping it all in context, up 30, up 0.4%. NASDAQ up 1%. NASDAQ 100 index higher by 1.2%. We've got the SOX advancing 3.1%. That's the semiconductor index. The 10-year 4.58%, with the 2-year 4.20%. Gold, meanwhile, up 1.1%. West Texas Intermediate crude holding right around 80 a barrel, 79.69 now on WTI, up by 2%. Brent 85.15, up 2.2%. Carol and Tim, that is a Bloomberg Business Flash.
All right, everybody. We are affectionately calling this segment the Baker Boys.
Banker. Don't expect any sourdough. It's not the Baker Boys. The Banker Boys are here.
The Banker Boys are in town. Why is it? Because we've got JP Morgan shares soaring, bagging its highest quarterly profit ever on $6 billion in a stock trading haul. And then there's Citi.
Yeah, trading lower. The CEO warns it may speed up job cuts. The CFO also asking for some patience. What about Wells Fargo?
Yeah, we saw this stock trading higher off its best levels of the day. And then there's Goldman Sachs, man, trouncing its own Wall Street trading records. The stock is soaring.
Oh, we're not done.
No,
there's Bank of America. Stock traders notching a record during the second quarter. It benefited from market volatility. Its investment bankers capitalized on a deal-making resurgence. That stock is higher today.
Wah. A lot of bank stuff. We're just going to put it out there. Let's get to it. Our banking roundtable. Sridhar Natarajan, Bloomberg News, Chief Wall Street Correspondent. He's in the house along with Todd Gillespie, Bloomberg News banking reporter. All right. So I'm not quite sure where to start, but I'm going to start with something that Todd flagged to us. And this had to do with Goldman saying its haul in just the past 3 months is larger than what it made in all 4 quarters of 2019 combined. This was the reporting that you guys did. That is, this is what
I'm
happens.
only laughing because Sridhar originally flagged that to me about Twitter. And then I put it in my story. So apologies to anyone
listening. This is why we have both of you on.
Well, initially we were like, well, maybe it might get past the number in 2017. We were wondering about that. And then actually the number came in so much larger than anyone expected that it actually surpassed the annual total. So the past 3 months, Goldman made more money in equities than it did in the entire year of 2019.
Thank you, volatility, guys.
Yeah, pretty much volatility, pretty much when we're talking about war in the Middle East here, we're talking about the best returns in 6 years for the S&P 500, and we're talking about huge fervor around the names coming out of Asia, particularly around the AI stocks, chips, memory companies that have really driven financing and intermediation to really like record levels.
Well, Sri, what's the strategy there?
I mean, look, fear or fervor, the fact is that the bank trading desks are ready to sit in the middle of all these trades, and they are truly making a killing. They are coming out on top, whatever the scenario. And it's hard to underscore how much of a turnaround this is from, say, the years right before the pandemic. If you think about the decade-long spell after the global financial crisis, it was sort of boring to be on a trading desk. There were severe regulations that hampered the kind of risk-taking that they were used to. There wasn't much activity and excitement in markets. And frankly, it wasn't great fun to be on a trading desk. You were not the apex predator anymore. But post the pandemic, the inflation levels that we've seen, the worst in 50 years, a pandemic was once in a century. A president, no one like him in 250 years, a revolutionary, transformative technology. All of that combined has left you with a situation where the banking trading desk right now at least feels like the best spot to be. And that is why the stocks that are most tethered to capital markets, the firms that are most tethered to those markets, the Goldman Sachs and the Morgan Stanleys have had such a good run coming into earnings, and especially after earnings today, with Goldman Sachs up 7.5% and setting a very high bar for Morgan Stanley tomorrow.
Is it all about Goldman so far in terms of the five? Like, is there one standout?
I mean, Goldman set the highest number in total, but JP Morgan's jump from last year was actually bigger. So, I mean, you had Goldman up a very strong amount, but JP Morgan actually up about 86% from the same period of last year. So while Goldman's total number, it still leads the pack in terms of the biggest revenue of stock traders across the street. JP Morgan's growth was actually probably even more impressive.
You guys know I like to talk about the consumer side of things and understanding commentary from how consumers are using their cards, what Bank of America says, for example, about the consumers who have its accounts and debit cards. All in on these five banks today, how would you characterize the commentary around the consumer?
Look, I would argue that the Bank of Americas, the Wells Fargo, and the JP Morgans of the world are no longer the canaries in the coal mine. We would, quarter after quarter, look at these bank results to try and gauge the health of the broader economy, to try and gauge the health of Main Street, the consumer at large. But increasingly, banks have shifted away from the lowest tier of consumers. They have gone towards the higher credit score consumers. And then if you look back at the commentary from just last week, Pepsi talking about the fact that higher gas prices have meant fewer snacks are getting sold across the country. And yet, when you listen to the commentary from Brian Moynihan or Jamie Dimon and every other senior banking executive, they still talk the same talking points about a resilient economy. And truly, that is what they're seeing. They can only tell you what they're seeing. So that shows you the dispersion that we've started to observe.
And let's not forget, they actually boast about that. They boast about having consumers with higher FICO scores, as you put it. They boast about having.
So what are the right financial institutions for us to look at for the health of the U.S. consumer? It's not a monolith by any means, but if this is a snapshot of the consumers that have a wealthier base or a higher FICO score, then what's the right place to look?
Oh, I thought I was making a great argument for Pepsi over JP Morgan.
Yeah,
that might be what the true answer is.
But those consumers need to be banked somewhere too. So is it like the so-called neobanks or these fintech firms now?
Yeah, I mean, I think it's a lot. I mean, payday lenders. You want to look at mortgage companies, car lenders, auto lenders across the country. We saw, some hiccups in that in some of those companies over the past year as well. So you want to look at the companies that are catering really not just to the sort of bi-coastal elites that are making more money from the tech boom and from the AI boom and from healthy financial metropolitan economies, but elsewhere as well.
20 seconds, really fast. Jamie Dimon, we always care. Weather forecaster again, talking succession. What do we need to know real quickly?
Today he's gone from weather forecasting to talking about the tectonic plates under our feet. That is weather risk.
So geologist.
So he's gone from weatherman to geologist. So maybe that's a reason.
But he's not going anywhere.
He's not going anywhere. He's going to be here for a few more years, and that's been his standard line. And that's
he's a tectonic plate that ain't
He might also
moving.
be a paleontologist if he's a dinosaur pretty soon on Wall Street. So.
Sri and Todd, thank you so much. Really appreciate it.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, folks, we did see shares of Lucid skidding to a halt after dropping 49%. That would be a record drop by this company. We do see the stock resuming trading, but it is still down a lot in today's session, down right now about 18% here. This is as the company is working with restructuring advisors to turn around its struggling business. That's according to people familiar with the matter. And so, again, we're seeing pressure in this company. I mean, Tim, it's a $4, just under $5 stock, and it's down 57% year to date. 37% of the float is short. We know the story. We've been watching it. Our Ed Ludlow and team have been watching it. It's been under pressure.
Yeah, David Welch joining along with Ed Ludlow on this story. Alex Partners has been engaged to examine all aspects of Lucid operations. That's according to the people familiar with the matter. I want to bring in Ed Ludlow. He's Bloomberg Tech host. He joins us from San Francisco. Ed, what can you tell us about this story and really why we're seeing shares move all over the place today?
Well, Lucid's making a pretty robust denial, right? That the bankruptcy is what's happening. They confirm our reporting that they have engaged Alex Partners, but the emphasis that Lucid gives is that this is about helping them get their operations sorted, right? They're in a position where, you guys nailed it, the stock already year to date has been under pressure. A lot of the sell side models that they need to still raise billions of dollars over the next coming years to pull off what they're trying to do in the EV market and the robotaxi market. But what Lucid's saying is that bankruptcy has not been formally put to the board by AlixPartners as an option, that they've engaged AlixPartners largely to focus on strengthening operations, look at technology. Does the market believe them, guys? I mean, what a literally volatile session. But when when the stock halt was removed, I think, pairing the decline, maybe it's, we'll give you the benefit of the doubt for now.
Ed, I mean, there's an existential question here too about how challenging it is to build an electric vehicle. Yeah. And this is something Elon Musk has talked about literally for more than a decade. And he cited all the American firms that have really been sent to the graveyard as a result of the challenge of doing this. What is Lucid's value proposition in a market that, at least in the US, is, I don't want to say declining, but in the US has been under pressure over the last few years and also faces so much challenge globally from China?
Yeah, Lucid's value proposition has been that it has superior technology, particularly on the drivetrain or powertrain side. So they've said for a very long time that their work on the physical battery pack, but also the BMS, the software that manages the battery pack, is better than anyone's. It has higher energy density. And so the idea was that they started with really expensive, but really high performance EVs. And that basically, because the efficiency, power, and performance of those packs was so good, they could work backwards from there. Basically use smaller packs, fewer individual battery cells, and then tear them downwards. So they'd eventually get to this point where they'd be a mass market player, but they just haven't got there, right? They have a very expensive sedan. They came with the SUV, which in America is everything, still expensive. And they were working on a middle tier platform. Very recently, they pivoted to being the hardware provider for Uber, in the robotaxi context. In the background, big question or sort of sub-story of all of this is Saudi Arabia. Saudi's public investment fund is the biggest investor and has kind of kept them going. You guys remember, I don't know where you got to this earlier in the program, but remember some of the original reporting was, if not bankruptcy, one of the things they were looking at was a take private deal, which in the context of Saudi's involvement kind of makes sense. But yeah, it's just they're not very good at building EVs at scale yet.
I'm looking, just a quick brief search here, and their cars cost between, it looks like, $70,000 to maybe $250,000. But Ed, I see Rivians on the road. I see lots of Teslas on the road.
I saw a Polestar yesterday.
Polestars.
I like those Polestars.
I see a lot of automakers in either, EVs or even hybrids. I don't know that I necessarily see Lucids. I mean, how many cars do they actually sell?
In the low thousands per annum, and again, it's the story of not being able to go from a niche low volume EV maker to a mass market. Super interesting to see Rivian shares a little under pressure by association with this story. They at least have given some recent upside, right? They basically told the market we're going to build more EVs this year than we said we were, modestly. And the R2 is their first attempt at a mass market vehicle priced in line with more of the median spend or the average spend of an American household. Lucid's nowhere near that part of the market or the story right now.
Hey, Ed, just 30 seconds. What's sort of the next part that you're watching? You mentioned reporting around a take private deal. What are you watching?
Yeah, simple story. Industry reports that the board is looking at bankruptcy as an option. Lucid comes out and says, no, we literally have not looked at bankruptcy as an option. AlixPartners hasn't recommended it. There's no smoke without fire. So whether AlixPartners does at the next board meeting say you guys should look at bankruptcy or take private, I guess we'll find out.
Yeah, and definitely a lot of volatility in the stock today. Hey, Ed, thank you so much. Ed Ludlow, he's the host of Bloomberg Tech. Find it on Bloomberg Television at 11 a.m. Wall Street time, Monday through Friday. Shares of Lucid were down as much as 57%. We did have a trading halt. Stock is down about 18% as we speak. Ed mentioned Rivian. It was down as much as 3.5%, just down about 0.5% as we speak.
What about shares of IBM? They're down about 25%. Falling today the most since 1968. We've got the details next on Bloomberg Businessweek Daily.